I would say this, that even though the lending experts are predicting that rates may remain in the 6% range, the reality is the focus will shift from that rate shopping to loan product innovation. Eventually, what'll happen is people are going to stop not worrying so much about what the rate is because it's going to become more of a common thread across most mortgage industries where everybody's kind of offering the same kind of interest rate. It's going to lean more heavily into what kind of loan product that these banks offer. Like, what is that innovation that they're bringing to the table to win the buyer that ultimately helps them buy a house? I would pay attention to the rate, but what I'm going to say is shop the product, start talking to lenders and figuring out what products they offer. Do they have grants set up? Do they have local grants? What does that look like? And then I would dive deep, deep, deep into the math of how that works for the affordability of your buyers. That's going to be the main hurdle for them, right? That affordability part. Like they need help to close. They need help with closing costs. I would absolutely start learning everything I can about what buy downs, how they work, how they correlate to the finances. What is an adjustable rate mortgage? What banks in your area are offering those and what those rates look like for those that want to do the ARM type loans? What kind of down payment assistance programs that are out there and what should we expect in 2026? And what I would also encourage you to do is focus more on payment, not so much the price. Now, I'm not saying you negate the price because that's the ultimate debt, right? But the reality is, most people need to understand what that monthly outgo is. We want to be conscious of how much the price is of the home. We're really more concerned about the cash flow, which is what lenders are looking at. They're going to look at that debt to income ratio per month and figure out these people can afford the house. So helping them understand what is your payment going to be. So getting really good at the net proceeds sheets to walk buyers and sellers through what that looks like, get good at those numbers. So I would say shift your marketing message to focus more on that kind of conversations. Then the next thing I would say is helping those that are not really ready to buy, those that are struggling to figure out their debt to income ratio, maybe have bad credit, walking them through. Maybe think through renters. Like, is there renters out there that just don't know? They don't know they could actually afford a house. Do they need help walking them through that? Encourage potential buyers to start looking at what they need to do to fix their credit, how they begin to start saving money. The reality is it could take 6 to 12 months for this to actually come about, right? So if you can help buyers structure that, lenders are going to be more willing to loan them money. So lean into that very heavily.